Good morning, good morning, good morning. Welcome to the Morning Blast. It is Friday, the 17th of April, all day. You join myself and, of course, Mr. Michael Brown for what is, what we fondly think is the most candid markets-related podcast every morning, where we add a bit of value to your day, put a smile on your face, etc., etc. Michael, how are you on this fine Friday?
Yes, indeed. Very good morning to you, Ryan. Good morning, everyone. A very happy Friday. I've certainly just had a smile put on my face because I just called up Google Maps to answer the question you just asked me on Twitter. And that did very much give me a chuckle.
There you go. Little inside joke there for those who not.
I don't know what I was expecting, but I wasn't expecting that.
Exactly. It always puts a smile on my face. Anyway, premium subscribers only will get that joke.
Apologies, ladies and gents.
I.e. those that buy us a pint. But say today, you good? You working from home? You in the office?
No, I am at home, but I can move if anyone needs me to at some point. But the economic calendar looks very, very quiet indeed. So without wanting to, well and truly put the kibosh on things, potentially we could be in for a calm-ish Friday.
Fingers crossed. But obviously you've completely jinxed that now anyway. But
well, no, actually, do you know what? In my defense, I did just get a message from our very good friend Ryan Littlestone over at Forex Analytics, who went, "We will probably have a quiet day and weekend now." So
right.
I'm blaming him rather than
me. Great. Well, that's that then. Right. If we do have a bit of a volatile day, I suppose it makes sense to know what levels to keep an eye on the technical aspect. What a segue that was.
Very good.
Our dear friend Clive Lamberts over at Futures Techs for the market moves from yesterday and levels to watch today. So starting off in the S&P, that made another new all-time high yesterday and posted the 9th green candle in a row on the daily chart for the futures. Clive does like something that's called the rule of 9, which in technical analysis is pretty reliable. It says that you don't see more than 9 candles of the same color in a row, which says today will be red. Now, as Michael already put forward to Clive this morning on our WhatsApp little group that we got, the Nasdaq is on 12. But the caveat being that Clive is only talking about futures and Michael's talking about the cash market. So you could be the judge of that.
I thought you were going to repeat what Clive actually said to me for a second, but
no. This is a family show. Yeah-ish. Speaking of the Nasdaq, obviously not. Clive is saying it's the futures have also posted 9 green candles in a row. Again, it has hit 12 in the cash market, so we'll see. Maybe the stars are aligning, and a bit of risk off on a Friday. Who knows? But more about what's going on, potential talks and backdoor action in the Middle East later on. You heard me. European bourses are a bit more muted, mostly posting doji candles yesterday, which, as we know by now, is all wick, no body, a bit like myself. But the DAX stayed above 24,150 once again, has also retaken its 200-day simple moving average, which is good news for the bulls. Bond markets tried to rally yesterday, but this was met with sellers. In FX markets, excluding Bitcoin, in FX markets, Eurodollar hit Fibonacci resistance at 1.1827 yesterday and found some responsive sellers off of that. Cable did the same. 136.00 is Fibonacci resistance, nice round number there. 135.95 is where the sellers returned yesterday. So are they getting in front of Fibonacci or just getting in front of a big figure? I'll let everyone else be the judge of that. Talking about Fibonacci, 74,500 is still the level that we've been focused on forever in Bitcoin. We've closed above here twice now. Chance for the bulls to get busy. Potentially over the weekend, we'll see what happens there. Gold, the yellow metal, and silver both posted quiet and damp sessions yesterday. I do like the word damp. The latter being silver, bounced off the Marabouzi support at 77.64 overnight, so that might cheer the bulls. London nickel keeps heading higher after its recent range breakout. Aluminium made another new all-time high for the move back to levels last seen. So not an all-time high, made a new high for the move back to levels last seen in 2022. Brent crude saw green and is still north of key support at 91.66. European gas market.
Actually, on that, sorry.
Yep.
I know Clive mentioned Brent. WTI contract rolled today, just for anyone who's trading that, don't get caught out.
So expect to see a lot of charts saying, oh my God, look at this big gap overnight.
Yeah, and all these people who say, the Brent WTI spread is back at $9 when it's always been there anyway, if you know what you're talking about.
Yeah, exactly that. European gas markets, TTF posted a small splash of green yesterday, but nothing trend changing. Stick with the bears in that one, technically. I know everyone that's trading macro will go, what the fuck are you talking about? It's definitely a stick market. But there you go. Remember, this is just Clive's technical viewpoint. EU carbon still bid this morning, printing a 76 handle as Clive went for print. Had a chance to head higher still to put some distance on the 74 level that we've been watching of late. The UK carbon market had another good day yesterday. It's back above 50 quid. I am 51.42 yet. I won't tell you.
Sorry.
I won't. I told Clive I'm not looking at the WhatsApp group whilst I'm recording these, and he still keeps messaging me. I keep getting drawn to it. It puts me off. Anyway, Michael, how are you?
Well, we can't help that you've got the attention span of a gnat, Ryan. That's
Well, I'll take that because normally it's golden retriever, but yeah.
well, whatever it may be. Yeah, well, as Clive rightly alluded to, thank you, Clive, as always, for your analysis, not so much for the jibes in the WhatsApp group, but Clive's a LinkedIn influencer now, so, maybe he's not going to be doing this much more. He's going to be off to bigger and better things, selling various bits and bobs on the internet and signing autographs and goodness only knows whatever else. Anyway.
Used pants.
Oh, oh no. Oh, God. That is a horrible mental image for anybody eating their breakfast this morning. In any case, as Clive did rightly allude to, we did have another day of gains on Wall Street. Whether it's a 9th day or a 12th day, I'll let you make up your own mind on that one. And that is very much as market participants continue to focus on the direction of travel and the path that we're on in terms of the Middle East, which continues by and large to lead towards de-escalation, towards calmer tones continuing to prevail. We will get on to Iran in a second, but I do just want to touch on Lebanon first of all, because of course the Israel-Lebanon issue is something that the Iranians see as basically intrinsically linked to the US-Iran conflict. And we heard from President Trump yesterday that the Israelis and the Lebanese have agreed to a 10-day-long ceasefire, which began at 5 o'clock yesterday evening on the east coast of the United States. President Trump also saying that Israel Prime Minister Netanyahu and Lebanese President Aoun, I've probably completely mullered his name's spelled Aoun. How on earth are you meant to say that? Whatever his first name is Joseph, so he's going to be going to the White House as well. Apparently, this will be, according to Trump, the first meaningful talks between Israel and Lebanon since 1983. So whoever that fella is, the big takeaway for markets on that front has been that if there is indeed a ceasefire between Israel and Lebanon, that potentially smoothes the progress and eases the way towards a US-Iran deal being done at some point in the near future.
Yeah.
And on that, sorry, were you going to say something?
Well, it's only just to highlight the fact that this was one of the key requirements from Iran in the talks in Pakistan, right? That Israel and Lebanon, come to terms.
Yeah, exactly that. So the market kind of reading across from that, saying that now that is kind of done and dusted for the time being, potentially that means we are getting closer, or at least it will be easier to get closer to an agreement between US and Iran in due course. On that note, of course, communications continuing, kind of back channel discussions are continuing. There was a sources piece doing the rounds via Reuters this morning, which our good friend Zach Eisman picked up on. This is citing some sources in Pakistan. They have noted that progress has been made in this backdoor diplomacy that's been taking place, and that an upcoming meeting between the US and Iran, Ryan, behave, could result in the signing of an agreement. Essentially, the sort of schedule of events here would be the signing of what they would call a memorandum of understanding first and foremost, and that would then be followed by a more comprehensive peace agreement within 60 days. That is very much in keeping with basically all of the other reporting that we've had on this front over the last 24 hours or so. We also heard from President Trump yesterday again, who was saying really just a kind of repetition of the greatest hits. The US is making a lot of progress. Iran can't have a nuclear weapon, etc., etc. He did say that he is not sure if the ceasefire needs to be extended. Of course, that expires next Tuesday or Wednesday.
Yeah, so just on this, there was standard social media hot takes and kind of poorly worded, red headlines, as you will. If anyone that knows the terminal knows what I mean. Yeah, so this kind of headline came out, Trump not sure if he'll extend the ceasefire agreement. Obviously, immediately people read that as shit. That means, it's all going to kick off when that expires. Obviously, you drill down through the article, which I always read the article. The amount of people that when PIQ's other Twitter account, the dedicated news Twitter account, they go, well, what does this mean? I said, well, have you read the article? No. Well, do yourself a favor, read the article. It's all free on PIQ as well. You don't have to pay Reuters or anything like you would do if you go on Reuters.com. Shameless plug, etc. But anyway, back to this story. The reason why Trump is saying he doesn't know if he needs to extend the ceasefire is because he's optimistic that a deal can be made, not when it reaches the deadline, we're then going to attack again.
Yeah, that is absolutely spot on. The other thing is that later in those remarks, which again Trump gave in front of a helicopter, I mean, why are you doing this? We can't hear you at the best of times. He did also say that he is open to extending the ceasefire if it is needed. Yeah. So absolutely, underscoring the point that I think we've probably been making for much of the week now, that if you take everything not only at face value in terms of comments we're getting from leaders, but also the sources, stories, and the diplomatic reports, nobody seems to be in favour of re-escalating the conflict at this point. I think, and again, touch wood, this comes to pass. Again, things could change depending on how the situation evolves. But I think at the moment, if you look forward into next week, almost the worst case scenario in terms of what's likely to happen is that the sort of can is just kicked down the road and the ceasefire is extended for a bit longer to allow further talks to take place. It seems at this point in time very, very unlikely that we go back to the sort of major kinetic action that we were seeing, a couple of weeks ago, a fortnight or so ago. Of course, that doesn't mean that the Strait of Hormuz is going to reopen straight away, and that is an issue that we will need to deal with in due course. But it does at least mean that the sort of direction of travel is still towards this whole thing essentially getting better rather than getting worse.
Well, exactly. And, I know it's a bit of a cliche, especially recently, where it's like vibe trading, etc. It's been even in like Bloomberg articles and whatnot. It's all about trading the vibe. But the vibe very much definitely is, things look to be either staying as they are or getting better rather than getting worse. And, the Israel-Lebanon thing only adds to that. But, we're quite happy to come back on Monday with egg on our faces. Again, we know more than anyone else that is reading the news as much as we are. But, you've got to look between the lines somewhat, and that's what we're trying to do here.
Yeah, absolutely. And I think just in terms of, just to kind of wrap up on this point, just in terms of, context around what we might see today, we'll do the day ahead later on. But of course, one of the hallmarks of trading on a Friday that we've seen pretty much since conflict began at the back end of February, early March, is this desire to just de-risk and hedge into the weekend, essentially selling equities. The S&P has not closed green on a Friday since the war broke out.
There's a stat for you.
Arguably, well, I stole it from Bloomberg. It's not mine, but
it's
whoever came up with it.
Me.
But you're right. I mean, you then look at today and you go, well, actually, are we in an environment where there is potentially less reason and less need to hedge that weekend risk?
Yeah.
Of course, there is some potential that we could see things re-escalate, but very much all the signals at this moment in time are that that's not going to happen. So, is this going to be the first green Friday of the conflict? I mean, we'll find out in 12 hours' time at the cash flows later on. But I would say that of all the Friday sessions we've had, we're into the 7th one now since this all started. It's probably got the best hope of being a positive day out of all of them.
And just on speaking about markets and, this run that they've had, etc. I did put out a post earlier on, but, it's worth saying to listeners as well that aren't necessarily on Twitter or might have missed it, that we're getting into that phase again where smart people need to be reminded that the stock market does not equal the economy. And I know that I mentioned this yesterday, but people getting again a bit like, oh, I can't believe the stocks are up here. Since the global financial crisis, since monetary policy and fiscal policies basically came in to support stock markets, the amount of extra money that's in the system, stock markets have not equaled the underlying economies for over a decade now, like best part of 2 decades. You only need to look at Germany for that. It's the sooner people understand that, people get their heads around it. Sometimes it's not an easy thing to accept, but you've got to accept it. And this is why we see these bear porn doomers that again, it's not a very good mental state to be in where you're just hoping for carnage every day, but it's why they always get their ass handed to them.
I completely agree. Well, I would actually just that adage does hold water. The stock market is not the economy. We all know that. But I would just say actually that when you if you drill down into the rally that we've seen, basically since the turn of the month, I think that was kind of when concern peaked at the back end of March. Actually, if you drill down at a sector level into the S&P, what's led the way since the market has turned around is firstly the technology sector, because we've had a kind of resumption of this sort of euphoria around AI. Secondly is the communication services, which is basically technology as well. We can lump those together.
Why they split those two up has always annoyed me. I'm not going to lie.
Yeah, and also I'm trying to read this off a very complicated chart, which doesn't make my life any easier. The third best performing sector since the back end of Feb, that is the consumer discretionary sector, which is probably a reflection that actually the US economy is still doing all right, despite the move higher that we've seen in energy prices. And fourth on that list is financials. And the bulk of the move that we've seen there has come since banks started to report earnings this week. And those bank earnings were all relatively solid on the whole. Actually, every other sector besides those four is trading below where it was before the conflict got underway. So, to a degree, yes, the market is not representative of the economy. The sectoral split actually suggests that those sectors which potentially could be exposed, most notably to the impact of what we're seeing, are continuing to underperform.
Of course.
You look at materials, you look at utilities, you look at real estate, they're lagging behind the pack. But it also suggests that if this does get, if we do see some sort of formal peace agreement and some sort of signed on the dotted line, then there's potentially even more room to run to the upside, because you've got 7 of the 11 sectors that have got to play catch.
Well, this is it, and this is why when I say like the stock market, I mean like indexes as a whole, because of obviously weightings, etc. And funny enough, you flagged this. One thing that kind of made me chuckle the other day when I was thinking of it, obviously this is how sad my life is, when tech stocks etc. were flying high. And that was the only reason stocks were all-time highs. Tech's outperforming, the breadth of the market is shit, yada yada yada. But then tech, big tech, mega caps, etc., had a horrendous run, and stocks were still doing okay. Obviously, those people go completely dead quiet. We are. Funny that. It's only been recently that tech has kind of felt like it's turned a corner somewhat. Again, in trading individual software names does still feel a bit of a crapshoot to me. With an AI company could come out tomorrow and completely wipe someone off the planet, kind of thing. But we'll see. But but I say this as a long-standing shareholder of Microsoft, which hopefully we've turned a corner there, because that's suffered recently. But
you are right in terms of the tech sector. I was doing a note yesterday in terms of some of the tech earnings that we've got coming up, and pretty much all of the kind of Magnificent Seven. And I know they're not exactly a homogenous group anymore, but you look at those names. Nvidia basically have gone nowhere since July, August last year. Apple has kind of gone nowhere since last autumn as well. Microsoft has obviously rolled over, but we've seen just broadly, apart from the move in Microsoft, the tech sector as a whole has just kind of been consolidating and going nowhere particularly fast for the last 6 months or so. So, actually, what we're seeing now is almost a re-acceleration of the upside that, we've just been in this very, very prolonged consolidation phase.
Yeah, exactly that. Which, let's take a step back, you could only say is bullish.
Well, yeah, I would certainly agree. And actually, do you know what? As we quite often say, record highs beget more record highs. They are a bullish sign, not a bearish one. Shall we move on? Because while we are bullish equities, I think we're probably all becoming even more bearish on Prime Minister Keir Starmer's future here in the UK.
Yeah, quite. So for those of you that aren't aware, and I don't blame you if you're not in the UK trying to stay out of UK politics, because we're in the UK and we try staying out of UK politics.
Yeah, but quite.
The segue over to the US is that obviously Peter Mandelson, obviously deep connections with Jeffrey Epstein, etc., etc. Not only was he appointed the UK's ambassador to the US, which at the time ruffled a few feathers, it came to light very quickly afterwards that his connections with Jeffrey Epstein were a lot more than what was being led on. Apparently, it was all Jeffrey Epstein's fault. Peter Manelson's fault. He misled the country, the Prime Minister, etc. Prime Minister came out. Also, to quickly add, Peter Mandelson is also being under investigation at the moment for sharing very sensitive documents with people like Epstein.
Yes.
Keir Starmer has come out multiple times and said it to Parliament that Mandelson had passed the vetting process. It wasn't his fault. It was the security services gave him all the thumbs up, etc., etc. However, what happened yesterday, Michael?
Well, I tell you what, it's a hell of a scoop, and I believe it was The Guardian that got it,
Yeah,
which
it
is
was.
potentially even more surprising given that they are very much a Labour-leaning paper. But it transpired yesterday that Peter Mandelson never actually obtained the vetting that he was that Keir Starmer said he did, and that someone somewhere decided to overrule the security services and give him that vetting permission regardless, which obviously then paved the way for him to get the job as US ambassador. So the response from the government has been, very much as you would expect. Starmer is not taking any responsibility for this whatsoever. He is saying that it is all the fault of officials at the Foreign Office. A fellow called Ollie Robbins, who anyone who followed the Brexit negotiations very closely will remember because he was Theresa May's chief negotiator. In the passage of time, he has somehow ended up as the senior civil servant in the Foreign Office. Well, now he's ended up under a bus because he's been forced out of his job because apparently this is his fault.
Well, quite. But, however, it must be added that Ollie Robbins didn't take the role until after Mandelson had already been sacked.
Yes, exactly.
So
Also,
go on.
Well, I was going to say also the other thing you've got to bear in mind is, Ollie Robbins is I've never met the fella, but he is a career, civil servant, sort of whiter than white, climbed the greasy pole, etc., etc. He doesn't strike you as the sort of chap who, would just throw all of that away and overrule something because Peter Mandelson says he'll buy him a pint later on.
Well, quite. And I think already, there's been a lot of, and I think we'll see a lot more whispers coming out of other Labour MPs. There's been a cabinet minister that apparently has texted a journalist today or last night and said, he hasn't got anyone else left to throw under the bus. He's ended up throwing Ollie Robbins under the bus, and even were disgusted that he's done that because Ollie Robbins wasn't even at the department at the time.
And I think it's also the other thing that's been somewhat instructive around this is the reaction that we've heard from other ministers.
Yeah.
Because, quite often when this sort of thing happens, you have, the cabinet kind of rallying around the prime minister. That's exactly what happened. Well, when was it? Was it the start of March? End of Feb, when you had Anna Starmer, the Scottish Labour leader, kind of calling for him to resign and all the rest of it, and you had the whole cabinet coming out en masse. The cabinet's been very, very quiet on the back of this. The only sort of senior minister who I've heard make any remarks on the subject is the Chancellor, Rachel Reeves, and the long and the short of what she said was, it's nothing to do with me, I'm the Chancellor, I don't work for the Foreign Office, go and ask them. Hardly a ringing endorsement, is it? Sorry?
Hardly supportive of Keir Starmer.
No, not at all. Not at all. I think...
Sorry, and this is Rachel Reeves, who knows that if Starmer goes, she probably goes as well.
Yeah, exactly. So I think this is something that's going to rumble on for a while. Again, as with everything sort of UK politics related, it's going to be the Sunday papers that are the thing to watch to see if we get any further, Labour MPs or Labour ministers calling for Starmer to resign. Kemi Badenoch, the Conservative leader, has already done so. I would imagine that Nigel Farage, the Reform leader, has done the same or shortly will do if he hasn't already. The one thing I would say, though, is that I'm not sure this accelerates the timeline for Starmer's departure. It more just makes it increasingly likely that it will happen. Because I think we were all, certainly I was, and I think you probably were as well, Ryan, operating on the assumption that we were going to get a leadership challenge after the local elections in May. They are only, what are they, 2 weeks away? 3 weeks away, the 7th of May, the local elections. So I think this is more just kind of a case of reaffirming our expectations that is going to happen. And this is just another bit of evidence to say, effectively, you don't know how to do your job and your judgment is utterly terrible. This is why we need to replace you. I think, any of the kind of view that, this is going to go, he's going to go today or he's going to go over the weekend, I think that's very, very unlikely at this point.
Yeah, I completely agree with you there. I'm glad you referenced that because, it's not like but put it this way, I'd be surprised if anything happened before the May election. Although something that someone flagged that I thought was just an interesting thing to observe, if he is going to resign for his own legacy, it probably makes more sense to resign before the May elections where they are going to get absolutely carted out.
Well, this is true.
But then we are playing like 8D chess at this point, so...
Yeah, and also that actually, comes under the presumption that he would resign as opposed to being forced out. Is he the sort of fella who would actually hold his hands up and say, I got this all wrong, I'm gone? I'd argue probably not, because otherwise he wouldn't be throwing everyone under the bus.
Well, but the thing is, nothing's ever his fault. So I don't think he'll wait to be sacked. I think he would, I think knowing him, he will resign in a very slimy manner that basically doesn't hold himself accountable, but still just slips out the back door.
Ooh. Yes, maybe. Anyway, we'll watch that one very closely. If anyone is running any sterling or gilt exposures, just read the Sunday papers. The market hasn't really reacted to it, to be honest.
What would your say? Right. So again, bring this back to trading and less about Ukrainian rent boys and Keir Starmer's back door. Oh, topical. What do you think market reaction would be if we get a red headline on the terminal saying Keir Starmer resigns?
I think we've already seen it on a number of occasions. Anytime UK political risk flares, the long end of the gilt curve sells off aggressively and the pound falls off a cliff, because the market immediately prices, firstly, a huge amount of political uncertainty, and secondly, a much more expansionary fiscal policy backdrop on the back of whoever replaces Reeves as Chancellor and whoever replaces Starmer as PM, whether that's Rayner, Streeting, Miliband, whoever. So I think it does send shivers down the spine, but yeah, the trade on the back of that headline is an obvious one. UK assets are going to materially underperform, and what I would argue is that would not be just a knee-jerk thing. I think it's one of those where actually you would get the knee-jerk move as the market prices in a different outlook, but then the first budget of the new Chancellor tearing up the fiscal rules, how much spending are we going to get, etc., etc. You then start to think actually it becomes more of a structural bear market for the long end of the gilt curve, even more so than we're in already.
Yeah, no, quite. Awesome. Any more? I know you said the data drop is light today.
Well, I mean, it's not light, it's non-existent. To be honest with you, it's the first day in a long time I can remember that there are no notable releases across developed markets at all. We do have 3 or 4 Fed speakers. Just bear in mind the Fed's pre-meeting blackout period starts at close of play today, so last chance for them to get any comments in ahead of the April meeting. Markets expecting no change whatsoever at that meeting on the 29th of April. And of course, the other thing just to bear in mind is any geopolitical headlines we get through the day and also over the weekend, and subsequently, of course, the potential for gapping risk on Sunday night, Monday morning when the market reopens, depending on what happens. But otherwise, that's all from me for this morning.
Wonderful. Well, it's also not just for today, but also for the week. But thank you very much, Michael. As always, my dear friend. Listeners, we hope we, again, always add a bit of value to your day, put a smile on your face, etc. Whatever you're doing this weekend, have a great one. Go out, touch some grass, see some family, be nice to each other. Today's show, obviously sponsored by the word backdoor and the number 9. Yeah, and we'll see you all on Monday.